I've lost thousands from really bad decisions. And the worst part is most of these were avoidable. Had I known about these 7 investment mistakes, I probably would have never lost the money. Learn these now and you'll save years of regret and hopefully save some money along the way. Today I'm going to be breaking down the 7 mistakes I had wished I'd known sooner. So mistake number 1 is trying to time the market. I used to think I was clever. I would wait for my investment to go down and I would buy it. And then all of a sudden it would go down more. So I'd sell it and wait for it to go down a little bit further. I'd buy it again and it would still go down further. The issue with trying to buy the market when it looks cheap is nobody knows whether it's going to go up or down. The best investors don't try and time the market. They will buy and hold for a long period of time. There's a saying in investing, it's time in, not timing. And this is really crucial. You and me as an investor, we need to make sure that we are looking at the long term. If we want to make a quick buck, yes, we can trade, but 99% of traders lose their money. I wish somebody had told me sooner about buy and hold for the long term. I'd be much richer than I am today. Mistake number 2 is not starting early enough. When I had my first job, I thought, when I earn more money, then I'll start investing. And this is one of the biggest lies that we tell ourselves. Oh, I'll do it when I've got more money. When investing, time is the most powerful tool. It's not about the stocks you pick or how much you buy. It's about how long you're invested in the stock market. What I mean by this is, let's take 2 individuals. We have one person at 25 years old and the other person at 35 years old, and they both want to retire at 55. The 25-year-old invests £200 a month, and the 35-year-old invests £400 a month. Even if you can only afford a small amount, £30 a month, £20 a month, start now, because time is the best asset that we've got, and there's not much of it. We can always make more money in the future. If you can put a small amount in at the start and then top that up when you do earn more money, that's the best strategy. Number 3 is investing without understanding the business. Early on, I used to buy stocks just because they were shiny. I liked the look of that stock. That had a nice logo. Oh, that's interesting. I'd buy it, I'd hold it, and I had no idea what they did. Investing in a company or a stock or an asset without understanding what that thing does is essentially just gambling with confidence. If you can't explain how that business makes money and where you think it will be in the next 5 or 10 years, you probably shouldn't invest in it. Now, yes, you can get lucky and spread risk and diversify, but understanding what the business does and where you think it will be 5 or 10 years from now is the difference between wealth and just aiming at a dartboard and hopefully one of them sticks. The first question is, what am I investing for? You need to have a long-term plan, understand why you're investing. Second is, when will I need the money? If you need money quickly, then investing probably isn't right for you. You're probably better off picking up some extra shifts and working to make more money. But if you are looking to build wealth over the long term, investing could be right for you. And number 3 is, how much risk can you stomach? When investing, your emotions can get the better of you. If you are over leveraged on risk, you can start checking your investments every day, every hour. That's not healthy. Sometimes you probably have put too much money in. If you think, well, if I was to lose this, I have no money left, you should probably take your money out, or at least some. Understanding risk is one of the key parts to investing. Mistake number 5 is selling when things get scary. And it's natural. You see your investments go down, you think, well, I don't want to lose any more, I'll sell. Most people that make money within the stock market don't avoid crashes. They just hold their investments through it. Volatility within investing isn't a signal to sell. It's the price that you pay for long-term growth. So next time you're thinking about selling because the markets are red, maybe buy a bit more. Now, mistake number 6 is listening to too many people. I followed every YouTuber and listened to an array of people, and I thought that that strategy was the best one. I'd then start doing what they said, and when it didn't work, I'd move on to the next person. Filtering out the noise is a superpower, and you need to trust your gut. If you don't believe what I'm saying, don't follow my advice. You only need a few trusted sources. My advice is, go with your gut. Nobody has all of the answers figured out. They can only go off their own experience and what they think might happen. Finally on this list, mistake number 7 is not understanding risk. The level of risk that you take in your life changes as time goes on. Individuals that are maybe in their 20s will have a higher level of risk to someone in their 50s. The reason is that when you're 20, you don't have much to lose, but in your 50s, you probably have quite a lot. The goal isn't to avoid risk, it's to understand it. Again, understanding risk can give you a superpower when investing. The right amount of risk applied consistently is what builds wealth over time. Every investor makes mistakes, and you're never going to go through your investment journey without making one. But understanding these 7 tips can help you minimize those risks and help make you a better investor for the long term. If I can give you one bit of advice, it's to start early, stay consistent, and avoid the noise. In the comments, let me know what your biggest mistake when investing was. Was it a missed opportunity? Was it the wrong investment? Or was it that you just haven't started yet? My name's David, and thanks for watching.